What's up, challenge group? Again, guys, sorry about no live meetup tonight, but with that being said, this is what I want to discuss anyways. But before we do that, let's take a look at a few things here. Apple announced tonight, and it looks like they're up about 2% after hours here. So 171, that's going to put us, right around this range here tomorrow at the open if this holds all night. So that's pretty interesting. And it also looks like Google missed earnings, and they're down about 2%, 1154. So right around here. So that excites me more than Apple per se, because this could be a great opportunity as money returns to Google at some point after the likely gap down tomorrow morning. And of course, the monster Amazon up big time. Now this is saying it's up about 1.5%. A while ago I saw on CNBC it was up 6, but nonetheless they beat and it's trading higher. Now the trade of today, guys, just to go over this with you, was Facebook. And again, every time I enter a winning trade, the same elements are there, and it's a big increase in demand. Now, listen, guys, in trading there's things you can control. You can control your entries and your exits. You can't really control what happens afterwards. Now, at the height of the day, I was up about $1,600. I controlled what I could control, which is my entry. However, it dipped and continued to dip, and I sold that for about $700 in profit. Now I was up 16 and lost about 1,000 of that open profit. But again, you can't let those things get into your mind. And again, I did my job and controlled what I could control on this trade, and I'm not going to be mad about banking $600 in a day on a quick trade. Again, if you think about minimum wage and what that would take, working a 9-to-5 job, it's a lot of hours. So one thing I've been talking to a few of you about, and one thing I just want to talk about as a group, look, I know a lot of you are busy. You have either, careers going outside of trading, families, kids, some of you are engaged, you're building homes, and you guys got a lot of things going on. So I understand that you don't have, the ability to sit in front of the charts all day. But, Chris in our group here, him and I were talking the other day, and that can kind of be a benefit. That can really be a benefit if you can't stare all day. And one example I think is perfect for this is that recent Alibaba trade, which, guys, please keep your eye all over this huge gap down today. But again, going back to this monster trade we saw here in Baba earlier a few weeks ago, if you're sitting there all day, someone like me, here was a dip where you could have panicked, here was a dip where you could have panicked, and again, if you're sitting there staring at it, some people look at that as a luxury. However, I more so like to look at it as if, a lot of mistakes can be made just by sitting here and staring all day at every little tick. So for those of you who have a lot going on, that can actually work to your benefit, because you're just going to look at the bigger picture in terms of entry, putting in a stop loss, and you're going to give these, these plays time to actually play out. And that's where the big profits are to be made. From here to there was 100% return, but from here to there was closer to 200-300. So those are the kinds of things, we really want to be mindful of. And the same thing can be said over here on this other recent Baba play. And again, guys, picture perfect, follow the money. Most of us did pretty well on this trade. But again, you could have panicked and gotten out there. Same thing here. And you're leaving a lot on the table. So, what I practiced this week was, again, patience. Now, I like to talk about my victories, but I also like to talk about my mistakes. So I've been watching Delta and took my entry, again, perfect entry, based upon that increase in demand there, and I let it ride out. Now, the two, call it mistakes I made, are I added to this position too late into the move, meaning, from here on, I should have been simply in profit, which I was, but I should have been collecting profit instead of adding to that position. So, again, one thing I think we should all focus on if you're very busy is remind yourselves of the power of options and the leverage that's available to us. 50, 100 to 200% returns on, any given trade are possible in the time frame of a week. If you are busy and you don't have the freedom to sit there all day, you can make a shitload of money, guys, with one good trade a week. But you can't get panicked and stopped out of those trades. So Delta Airlines is a great example of what could have been, the one trade of the week. Nice and steady and continued. So the biggest mistake I made here was I added too late. Now, scaling into a position can be a good idea. And what I mean by that is, let's say, I want a $2,000 position in Delta, total for this expected move in my mind. On that first volume increase, you could do 1,000 and, call it, on that second one, you could do another 1,000. Now that works from a risk management standpoint, allows you to kind of let the trade prove itself to you. However, keep in mind, your cost basis was down here. Now you're adding up here. Now you're kind of, you're changing that cost basis, especially if you're going in halves. And, I want to talk to you guys about real risk management. If you approach it with, the one trade per week idea in mind, again, I've talked to you guys about looking at, at losses in trading like an allowance. Where do you want to spend them? My focus going forward, I want 1 to 2 good trades a week with real size. I'm talking $4,000 to $5,000 each position. And my preference is to instead, take as much, as close to that full position size on that initial entry, and then just simply, tie my hands behind my back and let them play out. And the way I'm going to do that, peacefully, is by saying no to a lot more trades. And for you guys, who are busy, learn to do the same thing. You don't need to take, 2 trades every day. I think when people begin to label themselves as a trader, you now have this misconception that you must show up every day and trade, and place a trade. That's not true. Just step back and think of the reality of what we're trying to accomplish here. We're trying to extract money from the markets. With options, it doesn't take a lot of capital to extract, say, $500 in profit a week. You can do that consistently. It's about an extra 25 grand, call it. It doesn't take much capital to extract, $1,000 total of profit a week from the markets. You can do that consistently. That's $52,000 a year. And again, even to make $2,000 a week of profit does not take huge amounts of capital. And with 50 to 100% plus 200% returns, you don't need capital, guys, and you only need one trade per week. With a $5,000, $6,000 account, you could come close to making, with one good trade per week, $1,000 to $1,500 a week. And that's on $5 grand. So imagine you have an account of $10,000. You could risk 10% of your account on one position size, and that could help you reach that goal. So approach it like a business. You need 1 to 2 good transactions a week to continuously take your account in that direction. You don't want to do what most people do, and that's go up. And then, you have a great run and you give a lot back. You have a great run and you give a lot back. So again, why are we trading? We're trying to extract money from the markets and, and provide ourselves with a second source of income for those of you that don't do this full time, or for me, to provide an income and to build wealth. So with that in mind, one good trade a week. I still think it evolves around this, guys, following the sectors. But what you want to do on any given week is just focus on a few key sectors, and you want to focus on some of the bigger names within that sector. And it is that simple. Now, right now, we're kind of, in a mess here in the markets. But, you step back and look at these sector charts. There's a great example of where your focus should have been that week. Financials only. You've got to look at the big picture, guys, and say, where is the wind going? We always want to trade with the wind at your back. And if you're hunting for one good trade a week, the best likelihood of finding that trade is going to be in whichever sector is seeing the biggest, demand, the biggest flow of capital and, money heading into that sector. Now, we are kind of in a mess right now, so this is a tough environment. But, here's something interesting. Energy had a pretty good day today. Now, I didn't buy any because I'm going away tomorrow, and not really trying to rush into longs right now, given the current market. But this is something to focus on. A good amount of volume came in here. Now it probably isn't going to rocket right back to the highs. It might consolidate for a bit, but that looks nice. So what we want to do is go look at some of the the bigger holdings in that sector. Here's EOG Resources. Had a nice day today, finished strong with some volume. We see a continuation in there, guys, tomorrow, on strong volume, either on the 195 or 65. Those are the kinds of names that you want to look for your one good trade a week. And the reason being is that there's potential wind at its back, meaning the big boys, the big money, could be heading in that direction, and that's where you want to be. So we'll look at names like an Exxon. And again, nice day here. Why? Because the sector itself saw some strength. We can look at Chesapeake. Looks like it's finding a bottom here. So very simple, guys. If you need one good trade a week, what are we going to do to line ourselves up and put those odds in our favor? I think the first thing to do is to always have the wind at your back and always focus specifically on the sector first. Now, you don't necessarily need to trade the sector ETF itself. I personally feel, after time, the larger percentage gains to be made are, of course, individual names versus, the sector itself. But the reason I say start with the sector, guys, is because that is the best time to trade any given stock. And this is all the same stuff we keep repeating, but beautiful move here in energy. When were energy names having a good time? When money was heading into the sector. And the reason that it's easier to start with the sector, and this is the key, is that it's impossible to watch all these stocks at once. How are you going to monitor every single technology stock? How are you going to monitor, all the major financial stocks? How are you going to monitor all the major energy stocks? And you can't. I mean, you could, but it'd be a pain in the ass. But if you don't want to look at, 500 different stocks in order to catch this beautiful move here in EOG, I mean, guys, that's payday right there. That's a beautiful move. My stomach turns seeing moves like this. There's another one. Be patient. All these winning trades have the same characteristics, guys. Let me clear up this chart and get rid of, what the hell is this? Let me clear up this chart and get rid of all this crap. There we go. Nice and clean. Look at where all these biggest moves happen. Here's where we as a team can make our money, guys. And again, the more things you can say no to, and the longer you can wait for these ideal opportunities, the better off you're going to be. That takes discipline. That's a human, that's a mental thing. As soon as someone, gets into trading, they have it stuck in their head they need to place a trade every day. I would be fine if I placed 20 more trades all of 2018. I'm at this point with my capital, I'm 10 good trades away from having a six-figure year. But I'm also 10 stupid little trades away, from just digging into capital. I can afford at this point, call it ranging $5,000 to $10,000 position size. If a big trade, guys, is a few 100% return, I only need 5 to 10 to have a six-figure year. Throw in some big wins in there, and then some more winning trades, and that's a big year. So when do those big trades come? They really come when there's a lack of demand in a stock, and then all of a sudden that demand returns. But as I mentioned, we don't want to stare at every individual stock. Those of you who have a 9 to 5, Anissa, Chris, all you guys in the group who really don't sit around and they're, staring all day, use that to your benefit. And if you can't stare at every individual stock, I understand that. I don't either, even though I sit here all day. But what we can stare at are these sectors, guys. And again, that is our indication of where we want to go. You have kids, you put them to sleep, pull out your laptop, guys. Look how many weeks here you had to say to yourself, man, energy is dead. Super low volume. If some big demand returns, there's going to be some winning trades in there. All you need to do is take a few peeks a day and stay on top of it every night. And look what you would have started to see. Volume coming in. Now, you can either just simply trade, the sector itself, or that is when you can then go look at a list of some of the names in that holding, and that's where you're going to find the EOGs, those beautiful moves. I'm trying to think of some others. Okay, that chart doesn't go back as far, but that's the time, guys. Those of you who are busy, you don't have the time of the day to stare at every individual stock. But what you do have the time is a few times during the day and at night is to take a look at these sector sheets. And that's going to help you make the biggest decision of all, which is, where do I need to focus and shift my attention? And at any given time, that's where the attention should be, where the money is going. That's step one. Step two is when you finally see that demand come in, you can then go look at some of the top holdings of that sector and pick whichever one you think looks ideal and take your trade there. In one trade a week. For those of you, say, have a $5,000 account, instead of risking, 100 here, 100 there, 200 there, 100 here, wait for that one good pitch and risk, 500 on it. Risk whatever you would risk, on a bunch of trades. Put it all into that one trade. The losses are going to be the same if you manage risk the same, but the return is going to be much bigger. And again, it's focused. That's why it's called focus trades. We're trying to look at those specific things where our attention needs to be in order to succeed. And the biggest one, which I think we can all agree on a group, is being aligned with where that money is flowing. And I think it's just so important to return, to those winning trades. Financials. These are the pitches we need to wait for, guys, because this is when you can just absolutely freaking crush it. Put your kids to bed, get home from work, do what you got to do, and take out these charts. Again, financials, you would have had a week here to realize, wow, we're just going sideways on super low volume. What happens when volume returns? You're going to the upside or the downside. And then boom. And again, you want to keep it nice and simple. You trade the ETF as that demand comes in, or you go look where the big returns are going to be in the individual names. And I love doing this exercise here because it just really drives home that the individual stocks move when the money enters the sector as a whole. So remember this chart pattern. Consolidation here, big move higher. Let's take a look at Goldman. Consolidation, followed by a big move higher. When the sector itself was doing nothing, Goldman was doing nothing. We don't have the time or the desire to stare at every single individual holding all day. But what we can do is monitor this and then follow that demand. Then we can open up. Goldman, big time move. And then another one. Bank of America. Going nowhere, big time move. Wells Fargo, going nowhere, big time move. So why was I able to make 15 grand back here in November in that 1 week? And I can't wait for another week like that. Interesting observation. Look at kind of the consolidation we saw prior to that move. We haven't seen it since. Not in Wells Fargo, not in Bank of America, and a little bit here in Goldman, but the big moves come out of quiet periods, not out of these ripping strong, buck-ass uptrends. Why was I able to make 15 grand that week? Because I was perfectly aligned. My timing was perfect. And I'm more excited about this process that I nailed back in, early December, more so than I was about the money, because it was the process, improving to myself that, this is the inner workings and the function of the market. Why did I make 15 grand that week? Easily, because I was perfectly aligned with where the money was flowing. So I want you to picture you guys standing out there in the woods or some shit, right? And there's just a stream floating by. You want to jump right in and get swept away with that stream. You jump in right here, there's no stream, you're going nowhere. But that stream starts flowing, powerful. That's when you want to jump in and you get carried away. So I was perfectly aligned back here with where the demand was going. Made big money on Goldman. Made big money on Wells. made big money on Citigroup. What will I do next time I see a situation like this? I'll put 10,000 or so of risk in one name, and that's where you make, guys, with that kind of capital, 20, 30,000 bucks in a week. That's what I'm trading for. Not these, two, $500 quick profits. Those are nice, but I'm trying to operate, like an elite hunter, and that just requires, extreme amounts of patience. So with all that being said, I just wanted to discuss with you guys, because I know you're all busy. I think that is really the key. This is a simple way to approach the markets, and it is just directly tied to how this game actually works. Where the money goes is just truly where, the moves go. And you don't want to have to stare at every individual stock. All the tech stocks, all the financials, healthcare, that's too daunting. But you can just simply monitor these charts, guys, and identify, based upon the volume, nice and simple, where the demand is going. So tomorrow, if we see big, demand, big volume coming into XLV, then we can take a look at some healthcare stocks. Then you take a look at something like a J&J, which has done exactly what the sector has done. So that's all I really got for you guys tonight. I got to take care of business, but just to recap, for you call it full-time traders, you need a simplistic and easy to follow approach. I think you can all, at this point agree, or at least wrap your mind around the concept of, volume moves prices, demand moves prices. This is just truly the best way to have a bird's eye view of at any given time, where is that demand going? When you identify that, you can then look at the individual names in that sector, take your pick, and again, 1 or 2 good trades a week is all you guys need. And just, come on, be motivated, because it does not take a huge account to create an extra $100,000 of income a year off of 1 or 2 good trades a week. Talk to you guys soon.